Brad Williams, Frugal Finance. The question I'm asked time and time again is, Brad, where do I get started? Where do I find information regarding investments? How do I know I'm making the correct choice? A lot of shrugs, a lot of fear for first-time investors. Well, first and foremost, there's more information out there on the web than you can imagine. That's good. The bad is there's so much information on the web. That being said, I will rely on pretty much government or semi-government, quasi-government related information. Why? There's just so much misinformation, people trying to sell you stuff. This is a great source. There is tons of information by FINRA. FINRA is the regulatory agency for financial advisors, for stockbrokers. They have to get their Series 7 in order to talk about or sell you investments. Just an FYI, I've been doing this for 50 plus years. I was a stockbroker. I was registered with my Series 7s. I was registered with the Commodities Futures Exchange. I was licensed with the insurance group in California. That was a long time ago. But my true passion has always been finance, investing. And that's why I'm introducing this information, because when I do go on the web, I just can't believe the crap that people are trying to spew. It's misinformation. It lacks the research. It lacks the requirements in my mind or the due diligence. With that being said, this is just a cursory review of FINRA's Analyzer resource. This thing is packed full of information. I'll just say that. And it will take you a while to turn over a few rocks. In this case, is turn over a few pages in order to feel comfortable with what FINRA is trying to do. They are just a great resource, and I encourage you to take the time. Investing requires a lot of patience, not only in terms of investing, but from knowledge. Every day I learn something new. And like I said, I've been doing this for 50 plus years. I started when I was young, very young. And even today, I learn something new. Why? Well, look at the size of Wall Street. Look at the size of the finance industry. Look at the worldwide. Look how big this component is and how many players are in this game. And this fear factor of, will I make money? Will I lose money? Well, that's the reason I'm providing this frugal finance information. Yes, there's a chance you're going to lose money. Yes, there's a chance you're going to make money. Yeah, if you look at historic returns in the stock market, yes, you will make money in the long run if you do your research, if you find quality companies, if you understand the basics of owning a company. Yes, you will own part of a company if you buy a stock. I'll explain all that at some point in time. I'm going to have, there's so many, I've produced so many videos. You may have to just do a search about whatever it is on your mind, and I hopefully will have it covered. But that being said, this particular tool, and again, as I said time and time again, this information is going to be available. This link will be available in the section below. But here we have, using this FINRA Fund Analyzer. This is if you're completely new to finance. If you need to understand what a mutual fund is, if you need to know what an ETF is, if you want to know what a unit trust is, this kind of goes over it a little bit. The language might be foreign to you, but again, it's something that you need to take the time, or you can talk to somebody at one of the big firms, or I suggest talk to about 10, because in this era, it's a huge turnover. Keep in mind, speaking from experience, they're salesmen. They're salespeople. They're paid a commission, and they're going to try to be your friend. Wave that off and find out what it is, what their purpose is, and just be very, very candid with them. If you think they're looking at strictly their commissions, then you don't want them as a partner. In addition, you want to know how long they've been in the industry. If it's less than 3 years, you're going to have to shrug your shoulders going, can I do this on my own, or do I continue making phone calls, or do I start talking to friends that have worked with an advisor and they're comfortable with, and the results are favorable. Typically, the trial time for somebody that's a Series 7 type licensed, if they haven't lasted, you're looking for somebody with at least 5 years experience. Because typically there's a 3-year learning curve. They have to build what's called a book. And at least in my era, I had to build a book, and it took 2.5 years just to build the book. Then you try to continue your growth, but the growth slows significantly. And then it's just a matter of whether you want to stay in the industry. And then the pressure. You're going to get pressure from whomever you work for. If your growth is not significant, in other words, they're kind of like any other company, it's commission only, or it was, and you have to grow your business. If you don't grow your business, they're going to boot you. Or you're going to find that, for me, I was selling my soul to Wall Street, and I just said, no, I just don't believe in your philosophy. I don't believe in any of your bottom line requirements. In the end, Wall Street cares about one thing, and that's money. And it's a sad fact. But with that being said, I kind of went off on my tangents, and I will be going off on tangents. I will share some of my experiences, good and bad, using the FINRA Fund Analyzer. Types of calculations available in this nifty little tool. Up here, I'm not going to dive into the actual tool. You got to go over here, and I'll get into this in a different video. But use the Fund Analyzer. I'll just give you a quick view, and you're going to go in here. And then there's some criteria. You're going to have to do a little bit of research because you're going to need either a fund name, a ticker, or a keyword. And what do I mean by that? Well, you're going to need to know something. You're going to have to say S&P 500 or NASDAQ 100 or a ticker. Where do you get the ticker? Well, you may have to go to, and again, there are a lot of tools out there. Some are good, some are not. And as we continue moving forward, a lot of these are putting pay gates in front of them. And that's ridiculous. They're just making it more of a challenge so they can get to the bottom line and screw you out of your hard-earned money. Yahoo Finance, you need to be careful. Their numbers are not accurate. Their ticker symbols might be. What do I mean by that? If you want to buy Apple, or if you want to look into Apple, this is a fund analyzer. This is not a stock analyzer. So if you put in Apple, most likely you're not going to find anything. But if you have a mutual fund, just type in Vanguard, for example, or Fidelity, or there's 6,000 different funds out there. That's not including the ETFs. There's probably 14,000 choices to go from. Off the point here. Why use this thing? Okay, we can get into that later, but I'm way off topic. So anyway, this is where you're going to do some research called due diligence. Types of calculations available in the Fund Analyzer. Depending on your fund selection and the advanced options you employ, the Fund Analyzer can evaluate the following scenarios. Same fund, different shares of class, same account type. Go, what? Yeah, this is the kind of stuff you're going to have to do. Or not. When I say that, you can hire an advisor and they're going to go, well, we do this for you. But then again, it's a matter of, well, are they doing it for a huge commission? Or are they trying to develop a long-term relationship with you? Can't answer that. But this is the kind of stuff you're going to do. There's about 9 different recommendations here, and I'm not going to go through all these. I'm just going to go over the title because you can, so we're at 10. There you go. Go back up here. Here's the language. If this is new to you, you're going to go, what is all this? Well, you're going to hear me say this a lot. Read it if you need it. And read this. Compare different share classes of the same mutual fund. What does that mean? Read it. Same fund, same share, different account type. What does that mean? Compare different account types. All else equal in terms of cost and account value. For example, compare owning a specific ETF within a brokerage account to owning it within a wrap account. You're going, what? Yeah, well, a wrap account is, well, I'll get into that later. Most brokerage firms offer several types of accounts. Within and among funds, the fees associated with these accounts can vary crazily. I mean, I say crazily. I know that's not the correct word. But back in the day, they had these mutual funds that were kicking back 8 to 12%. I mean, it was just ridiculous. It was unfair. But in order for those companies to survive, they were throwing out a big carrot. And typically they're crap funds. Commissions tied to trading activity are assessed with brokerage accounts. All right. That's why you're using this particular tool, because it will show you the fees. There's a lot of other tools out there, but that being said, your total cost, account value, and what you pay to the advisor will vary according to the account type you choose. That's what's critical here. You want the best performance with the lowest fees. That's why if you are experienced, you know how to do this. And this language is not foreign to you. But again, as I said at the beginning, this will take time. Give yourself 6 to 8 months and just spend some time and read this stuff. This may be a little advanced, but that's fine. Same fund, same class, different brokerage firm. Okay. And they're just going to give you a lot of different options. Same fund, same share class, different platform. What does that mean? Compare different brokerage platforms, all else equal, in terms of cost and account value. What does that mean? Fidelity is going to have their in-house mutual fund or ETF. Charles Schwab is going to have the same thing. Vanguard, Citibank, which is, or Merrill Lynch. I don't know who else is out there anymore. I worked for EF Hutton. That's how long ago it was. And you're going, who's EF Hutton? Well, when EF Hutton speaks, people listen, was their tagline. So now I know there are B of A. I'm just going to use the banks because B of A pretty much controls any of these brokerage firms. Citibank and their program. What they're saying is each one of these are going to have their own proprietary program. Good or bad, when there's 12,000 choices, you're going to have to be able to narrow those down. At many firms, different brokerage services are provided depending on the fund and or investor's total assets with the firm. Fees also may vary. This is common with firms, so-called NTF platforms. NTF stands for no transaction fees. If you have 5 million, you're going to be looked at more favorably than somebody with 10 grand. I know, nothing you can do about that. That's why you need to learn this on your own. You need to understand how this game works. You have your top-notch, your high net worth individuals who are going to get the white glove treatment. And then you're going to get the first-time investor who's going to ask a lot of questions depending on who you speak to. You're either going to get shrugged off or you're going to go to Reddit and try to get that information. And I wouldn't rely 2 cents on that type of information because that's just opinion. Crowd information is not applicable here. What I mean by that, I said this industry is demanding in that a great advisor is not going to work 8 hours a day. They're going to work 12 to 16 hours a day to be the best. And to be the best, just like anything else, you as a client have to be worth their time. So the more educated you are, if you can speak the language, then you're going to be able to understand what this individual's talking about. You have to speak their language instead of the other way around. Types of fees, you're going to have loads, you're going to have commissions, you're going to have a bunch of other stuff that can add up. Even though they say, well, we don't charge a commission, they throw in a bunch of garbage language. Look at a credit card and look at all the crap that credit card companies throw in their language, but they don't state it up front. Read the fine print. Here, this is a microscopic view of the crap you're going to deal with when you're investing in mutual funds. ETFs, exchange-traded funds, are the competitive side of mutual funds. Why? Because mutual funds are notoriously high commission type investing tools. If you're knowledgeable, if you understand how stocks are traded, if you understand the ownership requirements. In other words, you buy a company, you're not going to pay a commission. I can go and buy Apple, I can buy Tesla today, and there are no commissions. That's good. But again, you're on your own. You can buy an ETF. And that's what's great about this particular tool is it's going to break down those fees. You can go in and you can look at, and if you really want to understand this, every mutual fund, every ETF has to provide what's called a prospectus. And it could be 60 pages long, but it's worth a read. They're going to tell you what's in the investment, what their philosophy is, what the cost is. This tool kind of just narrows that down, tries to pinpoint the key points. All right. You can also go to the different tools. You can go, if it, for example, if it is Schwab, if it is Fidelity, if it's any of the other companies, they're going to have to provide you that information. If you find a particular ETF or what have you, type that in to their in-house software program. And then they're going to have to provide you the prospectus or a red herring. What's a red herring? Red herring is the announcement pre-funding of this particular whatever it is. If it's an IPO, initial public offering. If it's an ETF, if it's a mutual fund, the sponsor has to provide this information to you. And it's a Securities Exchange Commission requirement. And then FINRA also regulates this stuff. And that's why they provide these tools. Different funds, different class, same account type, right? Different fund, different share class, different account type. Again, we're getting into the semantics here. Different investment, same platform, same pricing. Different investment, same platform, different pricing. And different investment, different platform, different pricing. And you can see the flexibility. This is just the tool. This is going to answer those what if questions that you're going to find once you open this thing up going, I don't quite understand that. Again, patience. And then if you have any questions, just throw it in the comments and either I'll answer it or somebody else is going to give you some feedback as to maybe the correct direction. Anyway, I'm just trying to give you a little bit of insight as to what this all means. Ticker symbol, you can see right here, fund name. If you know a fund, its name, and then again, you can see here, fund family and keywords. Don't be afraid of these tools. The great thing is they're free and they are regulated by, this is a self-regulatory agency, just FYI. It's not government. And there's, what are the numbers now? I don't know. I guess FINRA will probably tell me. What is it? Give me a spotlight here. FINRA's crypto. This is the homepage for FINRA. You can just get just about it. You can do a broker check. So if somebody's trying to sell you something, in other words, a broker, you can go in here. You can check their license or their name. They're not licensed. Maybe they're a scam. There's a lot of scams out there, and I'm going to have a lot of websites, or I have a bunch of websites on scams about us. But every licensed advisor, financial advisor, and if they're selling you something, needs to be licensed here. Anyway, Brad Williams, Frugal Finance. I'm a rambling on. See you soon. Thanks for watching. Williams out.